today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
Volatility is just the market's way of asking, still confident, are you? Technical analysis is the art of drawing lines between points that agree with your position. Government stimulus, where money takes a scenic route before finding its way to the stock market. In management, the word alignment often means, please agree with me faster. Analysts are cautiously optimistic, which is finance for, we have no idea, but it's too early to panic.
Intel inside Washington's wallet. Intel stock just pulled off the kind of comeback usually reserved for boy bands and forgotten politicians. After years of being labeled as a has-been, Intel suddenly looks more like a national treasure. SoftBank chipped in with $2 billion, the US government threw in $8.9 billion, and even Nvidia, its rival, added $5 billion. That's not a balance sheet, that's a rescue party. The message? When national security meets semiconductor strategy, too important to fail becomes an investment thesis. Intel didn't just get capital, it got credibility. And now, thanks to Washington's wallet, it's back in the chip game with a vengeance. China's growth story. Slowing down but not falling apart yet. China's GDP grew at 4.8% in Q3, not spectacular, but hey, better than the 4.7% the economists expected. That's like showing up late to class, but still getting applause for attendance. Exports kept the economy humming, even as domestic demand looked like it needed another caffeine shot. Household spending slowed, and fixed investments stumbled, suggesting that confidence hasn't quite made it out of the lockdown mode. In short, China's growth is less bad than feared, which in 2025 apparently counts as good news. Beijing might call this stability. Investors might call it plateau with Chinese characteristics. The eighth wonder of the world. Compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. Albert Einstein. Take $10,000. If you invest it at 10% a year, in 30 years you will have about $176,000. But if you owe $10,000 on a credit card at 20% interest, you will spend 30 years paying back roughly $16,000 in interest for the privilege of having nothing left. In short, compound interest is either your best employee or your most ruthless debt collector. The math doesn't lie, it just quietly compounds while you're busy buying coffee on credit. Turkey cuts again when inflation's at 33% and you still say lower please. Turkey cuts interest rates for the third straight meeting, 100 basis points down to 39.5%. Central banks elsewhere seem to be singing from the same music sheet, and the tune is called easing in moderation. But the real story, real interest rates. Japan sitting at around negative 2%, the Eurozone barely breaks even, and the US hovers around 1% positive. Enough to sound responsible without actually biting inflation. Emerging markets, though, are the new overachievers. India, Indonesia, and Brazil are finally in positive real rate territory, proof that after years of playing defense, they've learned to live with inflation instead of losing to it. So yes, rate cuts are happening, but the real yield story, still a world divided between the cautious, the bold, and the outright confused. Markets are on Valium when fear, valuations, and margin debt all fall asleep. If complacency had a chart, this would be the cover photo. Small and mid-cap valuations are sitting around 40x earnings. That's not optimism, that's financial delusion with good lighting. The VIX is near record lows, meaning fear has officially left the building. And margin financing close to all-time highs. Because apparently nothing says risk management like borrowing to buy more at the top. This cocktail of high valuations, low fear, and borrowed money rarely ends with polite applause. It usually ends with margin calls and regret. Gold's revenge. If you have been ignoring gold and silver while chasing mid caps or small caps, congratulations. You've just missed one of the greatest asset comebacks of the decade. The Nifty Small Cap 250 still leads the pack with a stellar 18% 10-year rolling return. But here's the twist. Gold is now at 15%, nearly double its long-term average, and silver has quietly jumped to 13.8%. Meanwhile, large and mid caps are still humming around 13 to 15%, which is solid, but not sparkling. So what's the story? Investors aren't just diversifying, they're quietly hedging against policy, politics, and paper promises. India's Silicon Leap. For years, India talked about becoming a semiconductor hub, and now it's actually doing it. Over 1.6 lakh crores in chip investments are already rolling in. Tata and Powerchip are building a massive fabrication facility in Dholera, Gujarat. Micron's 22,000 crore ATMP plant is rising in Sanand, and Foxconn HCL and a global cast of partners are setting up across UP, Orissa, and Assam. This isn't just a PowerPoint policy; it's physical infrastructure. India's chip story is finally less "Make in India" slogan and more now shipping. Tech layoffs 2025, fewer tears, same firing season. Layoffs in India's tech sector have slowed but not stopped. After a brutal 2024, this year's numbers are lower, yet still high enough to make HR departments flinch. India now ranks second globally for tech layoffs, just behind the US. And this time it's not just IT services. The pink slips are flying from electric mobility firms and online gaming startups, and apparently not everyone's winning at games 24/7. Bangalore predictably leads the league table, followed by Bombay, Delhi, and Hyderabad. So yes, the storm has calmed, but the clouds still haven't cleared. Here's a curious paradox. India has one of the world's biggest internet user bases, but one of the smallest electronics bills. Globally, people spend about $343 per head on electronics every year. In North America, it's nearly $950, basically a new iPhone every 12 months. But in India, it's just $91. That's one decent pair of earbuds and a charging cable. Despite being a social media powerhouse, India's electronics consumption is still only one fourth of the global average. But here's the twist: as incomes rise and the demographic dividends kick in, this gap won't last long. The next billion devices sold likely to have made for India written on the box.